Good morning, traders. Today is Thursday, May 18th. Welcome to this live intraday strategy webinar on SB Trade Desk. Michael Boutros here with you to close out the week, guys. Great to be here. Carlos, Graham, Kelly, Kazam, Mark, good to see you guys. So we just got the release of initial jobless claims here in the United States, 232,000 versus 240,000, slightly better than expected. Also did get the Philadelphia Fed business survey coming in at 38.8 versus 18.8. A little bit of an alleviation to the dollar here, which has been beaten down, I should say, pretty badly. So good to be with everyone here in the room again this morning. We got a lot to go over. So on the menu for today, we will just touch base on Aussie yen. I'm not a big fan of what it's doing right now, but we'll take a look at Aussie yen, Kiwi dollar. I do want to go over all the commodity updates. Yesterday in the webinar, we had a really constructive sort of late session discussion on what's going on with the comms, but crude, copper, gold, silver, Sarub, if you're in the room, I got you covered on all of those from last night. The previous update, we will take a look at the euro dollar. Look, it's interesting. It's absolutely stunning. The exact slope that we were looking at here in the webinar. If you saw Jamie's update yesterday on the swing side of things, he identified the same exact slope. So the euro, a very interesting pair that we're looking at coming in some basic resistance here as well. We'll touch base on Euro Kiwi, which is still holding resistance. We'll touch base on Sterling Kiwi, which is unchanged. Sandy, are you in the room? I know that you were looking at Pound Oz and Euro Oz. If that's something you still want to look at, let me know. Aussie dollars on list, dollar CAD, and dollar yen. Anything you didn't hear? If you have any questions or trade setups you'd like to review, guys, as always, feel free to throw them on the message board. All right, let's jump in rather early here and get things going. So before we do, number one, DXY. Here's what the dollar looks like. And the major premise of this trade, guys, is, the 97, 67, 97, 87 barrier that we talked about early in the week, that we talked about at length yesterday, is now offering near-term resistance. And this is sort of my pivot zone for immediate price action. As long as we stay below this, I'm very mindful of trying to press any dollar long position. And in fact, there's been a lot of chatter about dead cat bounces and whatnot going on in the markets right now. You're seeing volatility surge and start to come back. It shouldn't be a surprise to anyone. When you get these lulls in volatility, especially when you get everyone talking about the VIX and all this and the death of volatility, periods of contracted volatility are typically and often followed by periods of extreme volatility, and I think that's what we're on the precipice of right now. So, long story short, for the dollar index, again on the daily chart, you really want to keep a very mindful eye of resistance at 97.87, same level that we just broke through yesterday. Broader bearish invalidation for me is still going to be at the monthly open, i.e. 2016 open, this region right here. So this is what would shift my broader opinion on the dollar. As long as we stay below it, you're looking lower. Okay, 97.19 is just a soft target. This is represented by the low that you made in December of last year. And then obviously the key 618 retracement of the advance off the 2015 lows takes you all the way down to 96.47. And that converges on slope heading into next week. All right, so you kind of got a broad-based picture here of what the index is doing on its own. Immediate resistance 97.87, bearish invalidation 98.70, key support next downside target 96.47. Here's what it looks like on the intraday. So a closer look at slope on the 4-hour. You can see again the slope lines that we've been following. It's getting messy, I'll grant you that, guys, for sure. Even if you take a parallel off that low, you can see you got really nice touches there. So it continues to validate the slope that we're looking at. And I don't want to give it up yet because the markets keep following it. So that highlights near-term support where we bottomed last night, and certainly gives us a focus range heading into the U.S. session right of last night's low and then 97.87, which is that key barrier of resistance. If we pop through, like I said, probably going to get a rally into the median line, if not 98.70 on a recovery. Both of those would be interesting areas of possible short exposure. Again, on a bounce, if that were to materialize, guys, the first retracement that you would want to take, just as a drill here, is just a quick retrace of the weekly range off last week's high, and the 38.2 converges right there, right around 98.31, 98.30. So you kind of have an idea of how to play this if the U.S. session offers a pop through 97.87. Long story short, the dollar's at risk. We made a pretty big break. Okay, 96.47 being the major key downside hurdle on a break lower. Any questions on the dollar index? I know you guys don't ask too many questions on this index, but it's a really good way just to be able to gauge. It's the first thing I look at when I walk in the morning, just kind of gauge what the broad-based dollar is doing. Obviously, this index is very heavily weighted the euro, but with what's happening in the focal point of what the euro crosses are doing, I still think it's pertinent here. Okay, we're going to jump right through this if there's no questions on DXY. Let's just touch base real quick on Aussie yen. Here's what Aussie yen looked like last night. And here's what Aussie yen looks like right now. So, look, on this trade, I can't stress this enough. Today's price action is going to be absolutely paramount. Excuse me one sec, guys. And that's based upon this key region of support that we talked about yesterday. Remember 82.65, 82.97? We were talking about it for a while. You have the 200-day moving average, trendline support off the 2016 low. Okay, the upper parallel that we were in, we broke through. Now support, all converged right here, and the monthly opening range low. The focus is still on 82.65. We're trading below it right now. So the question becomes, do you want to play the rebound here for a short, a recovery just in Aussie yen to the upside, then sell it again? Or if this break is legit, do we want to just be straight up on sell the rally mode? Honestly, guys, I am a little bit indecision here. I'm going to take a neutral stance on Aussie yen right now, just based on the fact that the candle that we're putting in today below resistance, former support, opening range low. As long as we stay southbound of 82.65, I am not trying to fight this thing. Okay. Next downside target is 81.36. Just above that, you have the yearly low, and that yearly low registered right at 81.48. Gives you a 12 pip range to the downside here as your next downside target. But just be mindful. I'm not trying to do anything on this unless we pop through 82.65. And the intraday chart is just as messy. Look at this. Here's a 4-hour. Let me bring it into the 2-hour for you. And here's the 60-minute. Okay, some multi-time frame analysis here. You're seeing building divergence into the lows, right? Again, former slope support now offering, or former slope resistance rather, offering support. I don't know. It's getting messy, right? Yesterday I highlighted this pitchfork. I don't know if you can see it at home. I'm going to just make it thicker for you here to see it in the webinar. But this formation, taking off the highs here from the 24th of last month, the 5th of this month, and the subsequent high in the 15th, you saw the buy sector did give us some really nice pivot. Here's the median line. But the lower parallel, messy, right? Real messy. Now, if we take a parallel off that and extend it off that low, you can try, and you'll see that you will get some touches. But at the end of the day, for me, this could be either way. This could be an exhaustion. And if it is, the validation would be the break and pop through 82.65. If we settle the day below, well, you're right on track for 81.35, your next downside target. So we're slap in the middle of a pretty hefty range here for Aussie yen to open up the session. I really am not going to mess with this. Again, if you put a gun to my head, I would say try to get a rally back towards the monthly open. Failure there and a move back below 82.65 would be beautiful. We kind of got that already. I don't think we'll get it again, but the larger story remains bearish of 82.65. That's sort of my line in the sand. Okay, above that, you're probably going to get a little bit bigger of a recovery here for Aussie yen. Let me just fix that for you. So that's sort of my game plan for this. We started off the week calling this short with the break of the weekly opening range, but our final target was that 82.65. Now that we're below it, that's long-term trend. And when you start to come into these long-term median lines, these long-term multi-year trend line supports and resistance, on an intraday trade basis, you want to be careful because the market will sail through it 4 or 5 times before it finally makes a daily close and confirms either the break or the reversal. A close below 82.11 today. I have nothing till 80.23 puja. So 82.11. Well, the only thing I have is this 50% retracement. I think it might be worth looking at, Pooja, just because it's the entire advance off the lows we made from July, not taking into account the actual stretch low that we made on Brexit. So on that basis, and the fact that the 50% is just pips below the low for the year, I would still just look at that as a near-term target for Aussie yen. But then that brings you to 618 into 79.53. What do you have there at 82.11? See a trend line from December 2011 and March 2012 highs on the daily. Let's take a look. Oh, you're going way back. (2011) highs and 2012 highs on the daily. So you're looking at one of these bad boys. Okay. Decent pivot, resistance, resistance, break, acceleration, support. There we go. A little messy on the backdrop there, a little messy on the backdrop there. Nice pivot break to the upside. And then if we get into near-term price action, sure. I see what you're looking at. I see what you're looking at. But again, look at what price action is doing in the near term, Pooja. And this is how I love these drills, by the way. I think everyone benefits from this kind of analysis. So, you know, what you want to do is also check the efficacy of the line that you're using. What has price action been doing along that slope in the near term? And by near term, I'm even on the daily. So multi-year slope from 2012, that was picture perfect all through 2013. Started to get a little messy, Now I want that line to converge on something, right? I want it to converge on something to give me a little bit bigger of a zone, because we've already seen that price action has started to be a little bit less, it's less effective these years out. And just below that's the 50. So I think we're looking at the same thing pretty much almost for Aussie yen. See if you can't get this move going lower. It's a big day. I don't know how to say it beyond that. If it closes, again, southbound of this region here, it's a legitimate break of the monthly opening range. And that, my friends, puts us bearish objectively, irrespective of what Mike Boutros or Jamie or anyone else says. So keep that in mind. All right. Does that help, Pooja? Any other questions on Aussie yen or anyone in the room? That is number 2. All right. Yeah, you're more than welcome. So moving right along, Kiwi dollar. Well, did make that upside move that we were talking about early in the week. You know, I'm not a huge fan of getting crazy long Kiwi, but look, I mean, the structure was there. We came off of critical support. We noted that level at 68.28, 2016 open, big pivot in price, long-term trendline support off the 2015 trendline support, and the rebound further preserving and solidifying the monthly opening range for Kiwi. This thing is going to do something soon, guys. I'm coming up on resistance, or the pair is coming up on resistance, 69.51, 69.70. We've talked about that zone for a while. Here's what the intraday chart looks like. I mean, there's not really much to update on this from where we've been trading. Here's what it is last night. Okay, there's that resistance range pulling off. You want to stay constructive above the median line, like I said last night. Bullish invalidation if this is going to make a run on that key resistance. Still 68.91, which is the hourly reversal close that we made before this acceleration to the upside. So that's 68.92. Jamie has that as a high volume hour as well. Again, when the levels overlap, guys, you get convergences of these key technical factors, more conviction is offered on the trade. So I am going to favor the long side for now, about above 68.92. You know, for any type of real magnitude advance, you need to clear 69.70. I don't, you know, I'm not even trying to get cute with this. Okay, this is just a very simple setup we've been following for weeks, guys. This whole range, it's the same levels, same charts. The only thing we added this week was this slope on Sunday, or on Monday rather, and it's offered really nice pivots. So the median line caught the you know, the high that we made early in the week. Some pivots here along the 50 line, Again, that's initial support, lines up perfectly into USA trade session today with the Asia low, or this is the European low. And key resistance is still this 20 pip zone from 69.50 into 69.70 on the upside. So Kiwi levels remain unchanged. Again, I still think you do risk another pop higher into this zone, but largely speaking, this is bearish invalidation. As long as you stay below that, curb your appetite, okay, for Kiwi longs. If we get through 69.70, and as always, trading is an if-then endeavor. If we get through 69.70, I do think this thing has some legs. Okay, it's a big, big support zone of a multi-year trend line. So you don't want to sort of sell yourself short. We've been getting divergence all into this lows on the daily chart as well. Lower low in price, lower low in price, lower low in price. Higher low in the oscillator, higher low in the oscillator. So the hallmarks are there. You've got a well-defined range and monthly opening range right above support. Best kind of plays. Best kind of plays. Hey, Sandy, I was just mentioning your name earlier in the webinar. Great to see you. Any questions on Kiwi? So we hit up DXY, Aussie Yen, and Kiwi. I do want to take a moment and go through the commodities that we covered in last night's update, as well as take any questions. No, Sandy, it wasn't about pivots. It was about Aussie Yen. I don't know if you're involved in the Aussie crosses, but interesting levels that we're coming up on here. So first up on tap is crude. And I just wanted to highlight basically, we'll go over dollar CAD as well. I didn't put it in yesterday's update because the trade is the same exact levels. But crude, my friends, I sat here with this chart for some time yesterday and started speaking to me. So I thought I'd pass along the message. Here's what the crude chart looks like on the daily. So kind of a fresh perspective here. I just kind of erased all my lines and took a step back. A median line formation that I've identified or I've been working with now is this one. This is just off the highs that you made for the January open of 2017, the subsequent low that we made in March, and the subsequent high that we made last month. You can see the median line, really nice buy sector. The break of the median line saw acceleration, break of the upside of the median line took us right into key confluence resistance. Now, why is this region important today, and why did I highlight that last night? Big confluence region, guys. You have the monthly opening range high, you have the 200-day moving average, and you have the 50% retracement of the entire yearly range. Those retracements tend to be important, okay? Add to that, you have some former swing highs and swing lows, a little gap space here back on the November, January pullback, or December pullback. So irrespective, you're coming in some big resistance. Momentum is holding just right around that 50 mark, something you want to pay attention to, right? Momentum failure at 50 and broader downtrends. And we're kind of straddling this basic trendline support, extending off the low from April of last year. Boom, boom, boom. What is that? Is that a break? We'll find out. Okay, so the picture on the daily chart, in my humble opinion, looks pretty clean. It looks cleaner than it was than what we've been following. Now, as far as trying to pinpoint a low here or some sort of major pivot off that region, the only thing I have is the lower parallel, whoops, which caught this, kind of offered the rebound. Here's what the intraday chart looks like. Okay, so here's the 4-hour. Okay, and the 4-hour actually exemplifies the cleanliness, let's call it, of this formation even more so because you can see intraday price action really responding to the median line on multiple reference points, multiple time frames, and every break did see acceleration or a clear-cut pivot. So what that highlights is the 618 line of this pitchfork. Okay, if you take that 618, you can saw it actually caught the exact low that we made here on the 9th before vaulting. And that 618 line converges on the 618 retracement of just this near-term decline at 49.41. That's kind of like max resistance and what we noted in last night's report. Topside bias is at risk immediately below this region, And one thing to keep in mind for crude, guys, is that this is a very simple weekly opening range still. So if we see one more spike into this region and it fails, might be an opportunity to get back on the short side. If it breaks below the opening range low, look for a break sub 47.16 to mark resumption. We could chop here for a couple more days. We'll be looking at dollar price action as sort of a tell, but immediate upside bias remains at risk below 49.90. Okay, break below the weekly open, 47.87, and you're looking for the subsequent break below that 618 to really get this thing on a continuation. Slow burner this week, but the levels are clean. Levels are clean. Any questions? In fact, guys, I'm just going to clean this up for you. You don't need that 50 anymore. Just keep your eye on that 618. There you go. That 49.60 level is actually just a swing low from back here. So I am going to keep that pivot range sort of your key resistance. All right. As always, feel free to take a snapshot of this, guys. That camera button, the top right-hand corner of your screen, if you do want to reference this chart later in the day. Questions on crude before we move off? Sandy says, I got out of my pound Oz at 75.50. Okay, I do trade Euro Oz and pound Oz as daily ATR is good. I mean, obviously, pound crosses are going to be, especially pound Oz, yeah, that's going to have a pretty hefty ATR. But we'll get into those. I have it on the list, Sandy, for you. So let me move through these first. If there are no other questions here on crude, watch the weekly opening range. Heading into the close of the week, your key resistance is still 49.90. You need to see a break below 47.16 for any type of meaningful validation of a reversal or a continuation lower here in crude. That was number 4. Number 5 is copper. Another one, which was, we kind of rushed through it yesterday because it was really end of the webinar. But I definitely wanted to highlight it because it was a very clean formation nonetheless. Here's what copper looked like last night. So we were talking about the daily chart. We were talking about the fact that the rally had extended into 250, 255, 256, which is the low that we made from March. And it's just a very simple pivot in price. Key support was still that 248 level, a basic 38.2 that we ran into earlier in the month, and also ended up being, on a close basis, pretty much the close that we made on the 1st. So that's sort of the level that you need to watch for support. Last night, we had a near-term structure, okay, and a break of the weekly opening range low. There is a slope here I'll show you in a moment that we broke as well. I didn't have it on the report because I wanted you to focus on the weekly opening range. And as we were writing this thing was coming to 252. The weekly opening range low was just a tad smaller. We broke through it. Now we're approaching our initial target right here at 249. Okay, and that's going to be the support that you want to look at heading into the U.S. trade session right now. Here's what the slope looked like on the 120 minute. Oh, I did add it for you. There it is. So you saw the break of the near-term formation, the weekly opening range low, 252, initial target, 249. That's where we are now. Okay, so another one that panned out pretty well here on the commodities. At this point, like I said, you're approaching the yearly lows, the monthly lows, the lows. Okay, so curb your appetite. If you're holding short exposure, I wouldn't get shaken out just yet. If you're short from anything northbound of 252, I think you're all right for now as a stop there. If you're short below 252, I would go break even. Okay, because if you do get a rebound off this region, a rally back through 252 would kind of invalidate the initial opening range break. So that's sort of a base case scenario for anyone who's holding positioning. For fresh positioning, a rally back towards the weekly opening range lows, you'd be looking for failure. But this is a pretty big support. And again, highlighting the daily chart, you're at the yearly lows. See where my mouse is? Now, that being said, obviously, our bias is still bearish on this. So if we do move lower, your key support zone beyond this region is, in fact, 243 into 245. 243 being the simple swing high that we made back here in October. What is that? of last year. And then 245 would be two equal legs, 100% extension from the decline off the initial high that we made for the year back in February. So that gives you a nice little butter zone. I don't like the fact that just above that is the 200-day moving average. But if you take a look at the 200-day in copper, it hasn't always been that big of a pivot, slicing through price action on intraday bases. So keep it in mind. But basically, you're looking at 243, 245 on a break below this near-term support. At this point, by the way, you want to drop your bearish invalidation, obviously, to the highs that we made this week. You're not going to leave it all the way up there at the monthly open. That gives you 256 as your bearish inval. Any questions on copper? Where we stand, what the bias is, or where we're looking as far as targets? Okay, that is number 5. Number 6, real quick look at gold, which has continued to make headlines and will be in focus. Why? Well, obviously as a barometer of what's going on with risk, gold is going to have that inherent attention from the market participants. Listen, we came in some pretty big regions and we've been talking about the gold trade for a while, and specifically these topside targets, which we just hit an overnight trade. We didn't quite scratch the monthly open just yet. But we have the 618, which is 1264. We had slope resistance, which we've already gone through and come back. And then we have the current operative ascending median line formation for the advance, which is broadly still in play. Here's what it looks like on the live charts. Okay, pretty damn clean as far as I can tell. Okay, if this doesn't turn you on, you might want to check your pulse. There's 1264, 1240, your 618 retracement, convergence with the upper parallel, the monthly open just higher. The long side bias is at risk below this region. Again, heading into the U.S. trade session, we don't really have too much data or anything left on tap today. So if we do get one last stretch into this on the U.S. Open, entries for shorts, in my humble opinion, as far as near term. Entries for long or to reposition on the long side for support, I really wouldn't be interested unless we get a little bit deeper than the weekly. Well, this is not the weekly opening range. Let me fix that. Then this region here, 1251 is where the initial support would be. You have the median line for the current operative slope. This is just a slope that we were looking off, extending off that high. Some nice touch points. And then we have just a swing low and a pivot in price. So that's sort of an initial area that I would look for support. Obviously, guys, at the end of the day, you're looking at this as a basic trade structure. So as long as you're within the confines of the ascending formation, you want to stay constructive. If this breaks, the first thing I'll do, again, a drill, just doing a drill with you, is tack on a quick retracement. Guess where the 38.2 or the 50 rather comes in right here. If we break this region, this would be an area of which I'd start to look for entry. It's far away from where we are right now, around 1239, but from a trading standpoint, over the next 2 days into the close of the week, this is your butter zone. If we break initial support. Okay, and you know where the top side max is. A breakthrough 1268, sayonara. You're looking at a straight up breakout. You'd be looking back at 1278 here for gold in such a scenario. Okay. Long story short, heading into the U.S. trade session, close of the week, watch resistance into this region. Be mindful of any long exposure sub 1264, 1267. D, I haven't done Euro. Good morning. No worries. We're going to go in depth into Euro. It's at a big spot. That chart is the sexiest chart that we have today. So leaving the best for a little later in the session to make sure everyone's here. I got you. No worries. Any questions on gold? Brilliant rally coming into a huge area of resistance. Watch 1264, 1267. Break below 1251 would be the prefaces of a beginning of a little bit more of a correctionary play and a pullback for gold. By the way, guys, don't underestimate this trend for now. The whole shock of the Comey debacle and what that means for future fiscal stimulus coming out of the administration. The initial shock of all this is, okay, basically this is going to be gridlock, and if all this is going down, we're not going to get tax reform, we're not going to get growth-friendly sort of, more policy, growth-friendly policies from the administration. That's really what the market's moved on. Now today you're going to see the pendulum swing back. You're going to see politicians saying, no, things are on track. You're going to hear all this nonsense, and this is why we don't pay attention to this. We want to know what's going on. Price action is always what's going to drive our trades. Okay, silver. I just want to touch base on silver as well. There were some questions on this one yesterday. This is kind of what I'm looking at with the silver trade right now. It's not all that, what do I want to say? It's not all that dirty, or it's not all that ugly, I should say, but it's still in an area of which you want to be a little bit more mindful. Look, the daily chart really has nothing for me on silver. It's all about this. It's all about this. Basic retracement from the advance. We added this yesterday in the webinar. We highlighted 1703 as the 38.2 retracement of that advance. And we highlighted this key near-term support, 1264, 1265, and that's what we're checking right now. Again, here's what the update looked like last night for silver. And we were just coming off that 38.2. And I was telling you guys, look, I mean, at the end of the day, below the monthly open, the advance is at risk. Okay, you got to look for a little bit more of a pullback from here, near-term support at 1665, and that's where we're sitting. My problem with this trade now is I'm not sure what to do from here. I still want to take one leg higher to get it into that median line for a little bit more of a concrete pull, but we're not really getting that turn just yet. So even if you go into a little bit more of a micro scale on this, here's a 30-minute, if it'll load. Okay, here's a 15-minute. And you're seeing RSI just flatline on that 236 retracement. So for me, there's a 5-minute even. I mean, for me, there's really nothing here just yet. If you put a gun to my head, again, I think you get a rebound off this. But the longer story is that you're coming into some near-term support here on the silver pullback. Basic slope support off last week's low, guys. Nothing fancy. Nothing fancy. And in fact, if you want to get really granular with it, here's a 60-minute chart. Basic retracement, look what comes out. And I haven't even done this yet. I'm doing it with you on the fly right now. 236. Not only the 236 of the entire decline off the highs, but a basic 236 of the ascent off the lows. Oh, not even a 236, a 38.2, even better. Even better. So watch this near-term support here heading into the U.S. trade session for silver, being mindful that the opening range lows and the weekly open for the week come in down here at 1643, 1641. And that's the break that would give you resumption. Right now, you're focused on this support zone. Okay, that is 7. We ran through a nice little batch right there of all the commodities. Anyone have any questions on the commodities before we move into some of the juicy FX pairs that we've been following? Okay, let's get into the good stuff. Here's euro dollar. So, my friends, Jamie made an excellent video yesterday on the swing update. I hope you guys caught it. If you haven't, it's right there. Make sure you do take a look. And I just wanted to kind of reiterate what we were talking about here in the webinar and what Jamie said last night. If you guys remember, we did a drill here yesterday with this median line formation, talking about how the lower bound and the upper bound of the median line were kind of in compromise, but the slope was so dead on, I didn't want to lose it. And so we took some parallels to map out where price or where we should be looking for, reactionary price. Well, guess what, guys? If we take a slope, the same slope Jamie put on the webinar yesterday, it's the same exact slope we were following here. That's uncanny. Okay, that's uncanny. When you get that kind of validation, where on multiple time frames, multiple different types of analysis. Obviously, me and Jamie, our analysis is very, very similar, but we go about it a little bit differently based on our time frames. When we come up with the same thing like this, all the conviction that we need is right there. So I don't even need this pitchfork, right? Because it's already highlighting the same slope that we're looking at, and it continues to suggest that the immediate upside may be at risk here, but the broader picture remains constructive. Let's go into the daily chart real quick. So here's what Euro looks like. Kelly says, bring on the juice. I'm bringing it, man. Here it is. Cheers, mate. So here's what the daily chart looks like. Recall, earlier in the week, earlier in the month, 110.94 was the big region that we were looking at. 111.28 was sort of like my max level. That's the 618 retracement of the entire decline from 2016. Obviously, yesterday, an anomaly. We went right through it. On the daily chart, on the daily chart, I really don't have anything till 1190 into 112.20. 112.20 is a basic trendline support way back, okay, of the same slope of the highs that we made from 2008 and 2011. Take that same slope, you get some nice pivots here, extending in off the high from last year, basically puts us just a little bit higher from where we are right now, okay, as far as resistance. Near term, support, 1094, that same level that we maxed out at right on the 15th here, comes in just below the upper parallel, and that's right here, and that's what I have highlighted in red. That's near-term support. Key support and bullish inval for the immediate advance, objective, right here. Your monthly opening range highs, the 618 line, or this is the 75 line if I'm not mistaken. Nope, 618 line of the advance. Both of those converge on the initial monthly opening range highs right around 1021. So the levels that we're coming up with the same, the broader structure of the advance is the same, and again, if you take it into the intraday chart, gives you even closer of a picture. So we're using a different slope here, obviously, but on the intraday, this embedded slope to the upside further highlights exhaustion through the median line, failure, pullback, and now we're back below that 1229 or 1129 level. And again, you know, the risk is for a material pullback. Inevitably, you'd want to get long, okay? But the risk is for a material pullback if we do see a move sub 1094. And the levels that you would start to look at for support initially would be the monthly open, the monthly opening range highs, that 618 line. Both of those converge over the next couple of hours into the close of the week, essentially, right at 1021. So pretty, pretty clean levels as far as I'm concerned here on the dollar index, or on the euro dollar rather. Excuse me. Whoops. Let me clean this up for you just a moment. I don't think we need that 618 anymore. We're going to choke up our bullish inval up to that 100% extension, which comes in at slope support. That's 109.83. And a breach to the upside. The targets are really unchanged. 1190, 1255 would be the high day close. And a soft target. The 1618 is at 1285. Yeah, levels are good. Any questions on euro or where we stand on this? This is probably the cleanest cross, dollar cross, in my humble opinion, at this point. You know, we were kind of unsure on how the magnitude of the rally and whether we were going to get through 1095 or 1128. This was sort of my zone. I was looking for resistance. I'm not going to lie to you. I took a short off this and got stopped out on this stretch. I actually took a long on dollar yen yesterday too and got stopped out on the stretch too, although I still do like that trade. But I think near term, you know, these near term kind of like swings you want to be careful of. If we do see that move below 1094, 110.21 is a nice spot in my humble opinion. Do you think the euro rally is overdone, but uptrend still in play? Great question, D. I think the broader euro rally is not done. I think that the near term, the immediate advance that we've seen this week is at risk for a pullback. Does that make sense? You're in an uptrend off the lows from the year, and you're in an embedded uptrend just from the lows of April. So I don't think anyone can argue with me that we're in an uptrend. Now, trying to call the high, D, you know what I say about that. You know, anyone who's trying to call the high as the high is being made is a fool's errand, guys. It's not something that you want to practice doing. But you always want to be mindful of when the conditions are right for exhaustion. That's what I always try to highlight to you guys. You know, we're in the uptrend, but this is a big region. Okay, so watch out. If you're nimble enough, you can play the pullbacks on a short-term basis, but the broader picture still remains constructive. In my humble opinion, there's nothing here to really, you know, change anything. I do think near term it's vulnerable, 100%. And if today we close sub 1094, in my mind, that's the hallmark. Okay, look for that pullback 1021. Like I said, 109.83 would be the level that I would need to see give out, you know, for a little bit more of a dramatic pull-down reversal play in euro. And the gap, a runaway gap, D, gaps are there. Let me take a step back. I want to be careful how I approach this question. A gap doesn't necessarily need to be filled. You can get runaway gaps that won't get filled for years. The inherent need for us as traders to want to fill the gap right off the bat is a deadly play when you're looking at a market environment that we're in right now. You know, if all things held constant, Dean, we were just in regular trade session, there was a Sunday update or the Comey information came out on Sunday and you saw the market react and it was done deal, yeah, look to play the gap fill, sure. Market reacted all of a sudden, no material real shift in policy or anything that we need to expect. Fill that gap and let's move on. If the gap is made like this and then the market is actually seeing a stretch, there's a shift in behavior, you're seeing volatility start to expand, you're seeing that the market sentiment is turning over, you're seeing that risk is turnover. At that point, the gap becomes less of an issue, less of a playing factor in my mind, right? There's so much that the market's trying to digest. We're not going to move a 400 pip move in my humble opinion, or a 200 pip move just to fill the gap if in fact the pressure on the dollar is on. Does that make sense? D says, I'm in trouble then. I'm short from 1095. Okay. So you find yourself in a situation where you're kind of hoping to fill the gap and the market runs. So I'm not going to review, D, you know, where you probably should have gone out on that one. But I'm going to say this, you know, if we max out off this high, I'd be concerned. You know, I wouldn't want to get too in love with that trade. You know, I don't even, give me a sec here. Let me kind of, where do you have a stop on that right now, D? Or is that open? She says yes. Oh, no stop. Okay. Tricky way to play it, D. I'm not going to lie to you. I'm not going to sugarcoat it. Honestly, you want this thing holding sub 1130 at this point. I'm not even, you know, beyond that, I don't want to advocate any type of stop above because it could go right up in 1285, D. So, you know, be mindful of the weekly high. Be mindful of this confluence resistance. This was, like I said, I took a short off this region because this was big for me. Big. And yeah, it was a small stop, but nonetheless, I'm still interested in shorts off this region. This is big. So if you hold below 1129, you know, you might have a shot at it. But in my humble opinion, again, it's a tough situation you're in. I get it. If it plows through, you know, you're going to have to kind of, you might have to bite the bullet on that one. So hope it works out. Look for some exhaustion. Momentum's back below 70. That's a good thing. You know, see if we can't get the pullback. I don't know if you're going to get your entry again, D, on that one, but remember 1021. Okay, remember 1021. Certainly the sexiest dollar chart of anything we're going to go over today. And like I said, if this doesn't turn you on, you might want to try a different market because it's been a pretty decent ride. All right, I'm with you on that, D. Says, no, if I get 1021, I'm good. Right on. Right on. Any questions on Euro? That was number 8. Got to pick up the pace just a bit. Okay. Euro Kiwi, Sterling Kiwi, also updates from earlier in the week look like this. That was last night's update. Here's the previous day's update. And by the way, here's Euro from the previous day. And that's why as we came into 1228, you know, 1223, this is why I was looking for exhaustion. A little bit early on the cup, but that's sort of still my line in the sand. So Euro Key, nothing, too crazy about this. I just wanted to kind of highlight that we're still, broadly holding that resistance. Okay, here's the daily chart looks like. Pretty clean chart. As far as the fib levels are concerned, we kind of went a little bit through them, and we talked about that yesterday, about those fib levels now offering support, and that's exactly what's happening. We're sitting there right now. It was 160.44, 160.77. 160.44 was yesterday's low, and right now we're sitting at 160.47. So it's basically the same story, okay? You made some divergence into the upper parallel, overshot some of these fibs, but it's a Kiwi cross, so whatever. And, again, your near-term support and immediate bullish invalidation, I'd have to say, would probably be around 59.17, 59.04. Monthly open comes in right around that level as well. That's your key support near term for Euro key. Topside break, you're looking for that 61.22 level, 618 retracement, the entire decline from last year's high. Actually, excuse me, that's from the 2015 high. So even a bigger, larger scale retracement of price action. All right, so boom, boom type of deal. Maybe look for entries here. This is also bullish invalidation. And again, your topside targets on a break. Any questions on Euro key? Here's what it looks like on the intraday charts. Pretty darn clean, right? Nothing fancy. Some basic slope lines off the lows, catching the highs, catching the highs, catching the highs, catching the highs. Looking for a possible pullback into the weekly open. Again, levels are pretty clean on this one. Any questions on Euro key? All right, and that is Euro New Zealand dollar, pound New Zealand dollar. There is absolutely nothing to say on this, but I did just want to bring up the fact that we're continuing to hold, the opening range. Look for this break. It's going to give out at some point. Once it does, the longer these opening ranges take shape, guys, and the longer the market continues to consolidate and contract, the more pressure. It's like taking a soda bottle, shaking it up, and then popping it open, right? So the more it sits in here, the bigger the probability that we're going to see some sort of more major pop like we did back here. There's not too many instances recently that we saw, but you get the picture. So this opening range, the emphasis on it, or the significance on it, is that it's taking shape just below key resistance, which we've been highlighting for weeks. And that's 89.20 into 90.50. I know it's a big range, but it's sterling key. It's got it, okay? That's the 1618 extension from the advance off the lows from last year. It's the swing high that we made in July of last year. That's the biggest post-Brexit, or that was the highest point post-Brexit in the pound key, and that's all right above the monthly opening range highs. So you're looking for a break of this range. Here's what the near-term structure looks like. It's pretty darn clean, even as far as slope is concerned, right? You don't get these setups too clean, guys. You want to stay constructive above 182.60 or so. You need a break above 92.40 to get the validation for a major, major breakout here in pound key. For this to happen, I want to see Kiwi break down key below support, which is 68.27. We talked about that. So you can envision a scenario where Kiwi kind of runs into the resistance that gives sterling key one more drawback, right? But long story short, you need to clear that top side, looking for longs either with a break through this or with a dip into here. But pound Kiwi levels remain remarkably clean here. Any questions on pound Kiwi? Okay, moving right along. Let's jump into okay, I'm sorry. I was looking over my notes. Guys, was there any interest today in pound Oz or Euro Oz? I'm just looking through your comments. Eddie, I got that. Yeah, we covered it early in the session, so that'll be, you can watch the archive. I'll have that right up. Okay, let's jump into Aussie then. So here's what Aussie dollar looked like early in the week. We are right here on the 15th. So we open up the week right above the 618 retracement. That was 73.85. Remember, our bearish invalidation level was 74.40. We got a couple of shorts off that level, actually 3 in fact, and they were all pretty hefty moves. So it worked pretty well. In overnight trade, we're obviously breaking higher. On the swing side of trades, Jamie is long. We put the stop to break even yesterday. But here's what Aussie looks like now. Okay. We came right through into the monthly open and rejected it to the downside. So I still want to treat this as a range. Technically, guys, this would have been a break of the weekly opening range, but the fact that we rejected the monthly open almost to the pip, literally, the high today had registered, or the high overnight registered at 74.67. The actual monthly open comes in at 74.67, literally. So literally came into the monthly open and got rejected. Typically for me, that's kind of like a pause button, right? I don't really want to get too aggressive on it. Not only that, on the 4-hour basis, you are seeing momentum start to show you hints of divergence. Price action with a higher high, the oscillator with a lower high. And again, just as a review, guys, even if the oscillator doesn't make a lower high but makes an equal high, remember that when you're looking for divergence, all you're looking for is that the oscillator does not confirm an extreme in price, not the vice versa. So if price makes an extreme, did RSI make a new extreme or not? And it didn't, right? You can see that that point to the left is higher. Again, these are nuances in oscillators, just a quick reminder, but you get the picture. So, you know, I don't really have much to do here on Aussie. If anything, I would actually be interested if it spikes one more higher and trying to take kind of a little bit of a short stab at it from an intra-week, intraday standpoint. At the end of the day, you know, you're still within the confines of this downslope. If this low is going to materialize into a bigger base for Aussie, the trade needs to stay constructive or needs to stay above 73.85. 73.85, again, is the 618 retracement of the advance from last year's low, specifically that we made in December. And it's the weekly open. So trying to stay as objective as possible to price action. What price action is saying, your weekly range right now is consistent of the weekly open and the monthly open. Look for that break. Look for that break. Keeping in mind, we're still in this formation, right? So until we break out of that, any type of long-term assumptions on an Aussie breakout, you want to be cautious of. Aussie looks like a nice 5-wave on a closed basis, maybe a deeper pullback before we break 74.66 higher. What time frame are you looking at there, Pooja? On a 4-hour close. I was trying to get your state of mind here. Are you talking about this decline? Because if you are, I would agree with you 100%. 1, 2, extended 3, 4, 5 into the lows, sort of a recovery, may take you on a little bit bigger of a stab here before kind of trying to make a move. 74.66 you're saying? $74.66. Yeah, that's kind of a stretch trying to call that a 5-wave, I think, in my humble opinion. Let's see what it looks like on the intraday. 1, 2, 3, it's within there, there's 4. Yeah, I see it. I see it. I'm very mindful of getting too granular with the wave counts on the intraday because you can really mess yourself up and jack things up if you get too excited about it. But I could definitely see that being a scenario here. Yeah, I think the deeper you get, the closer it looks. So you get one more stab, one more move lower, and then you kind of try to make a stab there. Possibly, so you'd be looking for the correction from here. Either way, 73.85 would still be an interest area of support. And 74.66, I mean, I'd just be looking, yeah, for the 67 for the monthly open break. I could see that panning out. So basically, what you're interpreting is that you look for a pullback from here to get long, and that's basically what we said earlier in the session. I'm agreeing with you on that one. I'm agreeing with you on that. I think the immediate risk, though, is that the advance is going to pull back from that level. Let me see a little bit deeper in price action here if we got anything juicy. It's a 60-minute. There's your 30-minute. There's your weekly range. Okay, and again, bear with me one minute, guys. I'm just doing this for the sake of practice. Let's see if we can't locate any kind of interesting slope here. Okay, that further highlights that level that we were looking at, 74.77, or that slope line is what we were looking at earlier. No divergence on the near term just yet. Any buy sectors here? No. All right. So keep this general premise in mind right here, heading into the close of the week. I tend to agree with what your interpretation is there, Pooja. I would just be careful about just using the wave count as a justification for that trade. I'm much more of a trader who's going to watch momentum and what price action is doing in the near term than necessarily basing trade just on the wave count. Wave counts for me, just again a humble opinion, they tend to be a great help when they're just further validating what your opinion is. But I don't want to like base my trade idea just on the wave count. But be careful. Yeah, I mean, this is a nice region here. Sandy says, for me, I would only long Aussie for this week. So Sandy, I mean, it depends what your time frame is. Again, keep in mind, Sandy, Aussie is up, what, 8 days in a row? You know, I'd be little mindful of just continuing to favor alongside at the highs after an 8-day rally. That's just my opinion. But, you know, certainly the rebound is still in focus. I'll tell you that much. Okay, you're super short term. Okay. Yep. All right. And that's Aussie dollar, guys. Any questions on Aussie before we move off? I do want to cover dollar CAD and dollar yen. I'm not going to leave without doing those. So let's jump into those real quick. Here's what dollar CAD looks like. Obviously, we went over crude early in the morning, or earlier in the session, rather. Dollar CAD's finally making a move. This thing has been a little bit annoying because we covered it earlier in the week. And the levels, you know, we've been favoring the downside, really waiting for a break below the monthly open. We got it, and it did nothing. The bullish invalidation, 35.75, is still support, and that's the level we need to break. So it made the move early in the week. It sat there. We've been sitting there ever since. Last night rallied into the monthly open and failed yet again. So this pullback maybe finally starts to materialize, especially if crude prices you know, finally start to do something. If you get oil making another stretch, you know, to the upside into that zone we talked about, 49.40, if that happens, giving CAD a nice little pop, maybe that may be the fuel we need to get this move lower in dollar CAD. You need to see 35.75 break, guys. Big support below that is basically the 35 handle. You have the 50% retracement of the near-term advance just off of the April 13th low. You have the lower median line parallel, which has been a decent formation so far. I can't really complain off the lows. And both of those, just ahead of that, you have the 1618 extension of the decline coming in right at 135.23. Former swing high, 135.30. That gives me a range of 135 into 135.30 as key support. Again, bigger of a range than I like to give you guys, especially for an intraday type of thing, but you got to be mindful of this whole region. And not only that, again, I don't idealism doesn't work in trading, right? It's not a part of the strategy. So if I just look back in price, it's caught some swing highs, it's caught some swing lows. This whole zone you can see is a pivot. So it's worth it to pay attention. 35 into 35.30. Questions on dollar CAD. Last but not least, dollar yen. Sandy says, by the way, any update on the alerts? Yes. So for those of you who weren't in the initial rollout, just as a quick side note here, for those of you who were in the initial rollout for the SB Alert service, all of your information this week was forwarded to Alert FX, and certainly they will be inputting that information. So within the next week, you should get, by next week, or sometime next week, early in the week, you will get an email from Alert FX, which is going to verify your username and password. And from that point, you will get the emails and the alerts automatically sent to your email box. So I haven't forgot about you, Sandy. It's in the works. So is everyone else in the room. If you applied late for the beta version of our Signal service, again, by next week, you should be up and running with that. Dollar yen, not going to leave without doing that. Here's what dollar yen looks like to close out the week. So another trade for me, a little bit annoyed because I got stopped out of my stop in overnight. It was a 14 pip stop, is too close, but still I'm gonna still stalking this thing for another entry. The 618 retracement. I played it too close to the chest, but the initial reaction off it was really nice last night. That was 110.51. 110.51 converged on, you name it, basic slope support. I'm gonna take these trades 9 times out of 10. Okay. Now, obviously, on a 4-hour block, it's way oversold. It wasn't like this when we got in yesterday. But if you take a deeper look at the multi time frame, you could see that on that block, on a 60-minute, you saw divergence start to mount. And in fact, even on the new low we made last night, another divergent signal. Now, again, I always tell you these divergent signals below 30 are not your strongest, guys. These are going to be your weakest, in fact. But nonetheless, it's something to pay attention to. So if I zoom this in even to a closer chart, here's the 30. You can see that divergence still holds. We're back above 1051. Do think you risk a little bit of a recovery off this region still. I still like the bounce with near-term resistance up at 1145 into 1125, this region right here where we capped out the advance yesterday, or an overnight trade, I should say. Any questions on dollar yen? It's interesting that I'm actually the one pointing out that I like dollar yen now, but if you guys remember, again, not to beat a dead horse or anything, but here's the dollar yen setup from the 15th, right? There's the break. In fact, even if you go further back, there's the 11th. We were talking about the fact that dollar yen was coming into resistance. Long side is at risk below 114.60. Look for a break of the trend line. Trend line gave you the break, tested as resistance. We sat there and just kind of drifted for a couple of days. Inevitable breakdown, taking down all our downside targets. Now we're at this level, okay? And you want to be watching this as key support near term for dollar yen. No, Sandy, you're all set. I think you sent me an email, right? I forwarded your information. You're all set for Alert FX. You should be getting that email next week. Any questions on dollar yen? Looking higher, if we pop through 1145, 112.20 would be the area of which you'd start to look for initial resistance. D, I'm going to throw that question right back at you. Would you, I thought you were asking me why. Are you asking me why I would buy at 110 or would I buy at 110.50? I took a stab at it at 110. I think the entry was 110.672 yesterday or something like that, with a stop right below it. And on this wick, I just got stopped out. But yeah, I do like that region, D, because of the confluence region that we just talked about, for the reasons we just talked about. The key 618 retracement, the divergence that we're seeing on all different multi-time frame facets, whether it's the 60-minute, whether it's the 30-minute, whether it's the 15-minute, so you have building divergence, momentum is turning, you're at a 618 retracement, you're at structural support. These are all the factors that we look at. There's not one thing. I don't like to take a trade saying because there's a 5-wave count, or I don't like to take a trade because there's a trend line there. For me, it needs to be a sort of dynamic, right? And here you got a lot going on. 618, trendline support, divergence, those kinds of trades, in my mind, it's worth a shot. D, does that make sense? If you're going to look for a fundamental view, guys, for every single reason you take an intraday or intra-week trade, you're going to not end up trading anything. That's just the way it works. There's always some doom and gloom, or always some headline, or always something that's going to shake you out of a position. So you want to make sure that you're paying attention to what price action is saying, as opposed to, oh, well, the dollar is selling off. I don't want to buy the dollar because Trump is going to do X, right? That doesn't mean dollar yen can't go right back to 112.19 right now. So stay objective to what price action is in our discipline, and that's always what's going to pay off, I've found over the years. Didn't even notice. We're way over time. Markets have been over for 6 minutes. I got to run, guys. Again, I want to thank everyone, rather, who attended today's webinar. This will be archived up on SB Trade Desk as soon as possible. I want to wish everyone a great weekend, and I will see you all bright and early next week. Remember our public webinar on daily FX on Monday morning at 8:30, right back here on SB Trade Desk Tuesday, Wednesday, and Thursday next week. Best of luck trading, guys, and have a great weekend. Cheers.